The market doesn't know what keeps you up at night. It doesn't know when you want to retire, and it doesn't know how old you are. The simple truth is, the market doesn't care. But if you care, you've tuned into the right place. You're listening to Investor Resources, bringing clarity to the confusing world of finance. Here are your hosts of Investor Resources, Don Creech and Perry Sykes.
This is Don Creech. Perry will join us on the next podcast. Question that we are frequently asked is, what's up with the market? Where are we going from here? Is the market going up or is it going down as it did all of August? And it's certainly a period of uncertainty simply from the time of the year that we're in. This is a seasonality period of weakness, August and September, sometimes leaking into October. We find that the market moves sideways. Why is that? Well, presumably, we assume that the major traders go on vacation, just like school teachers and school kids, and they're not paying attention. So the market wanders around, and it certainly wandered lower over the past month. When we take a look at what is going on with the market today, Monday, September 11th, we did have a little bit of a break in the dollar, and most people don't pay much attention to the dollar, but it's a pretty significant input as far as the direction of the U.S. stock market. Why is the dollar important? Well, it is the global currency, reserve currency. It's how trade is done. And a strong dollar is not typically good for stocks. It's not good for gold or many of the other metals that the industrial world uses. It is good from an inflation standpoint to have a strong dollar because we are able to buy products from other countries less expensively. That's a positive, and that's a positive for the Fed as they deal with the question of whether or not interest rates need to be raised higher. They can forego the September rate hike that is anticipated by some, or when will they ever begin to cut interest rates and ease the higher costs that home buyers and businesses are suffering with. The other threat to the dollar that has been in the news recently, along with the G20, was a meeting of the BRICs. The BRICs are Brazil, Russia, India, China, and South Africa, all of whom have put together a cooperative effort to create a new reserve currency that would replace the dollar. That's the theory anyway. We should pay attention to that, though the threat is more psychological than it is real. I have the dollar chart up on the screen, and what we see here is Monday, the dollar did sell off, and with that, we got a bit of a stock rally. I'm going to go to that in a minute. But let's take a look at the lower part of the screen. This black line says that there's a lot of participation as the dollar has been increasing in value over this last 8 weeks, which is a phenomenal run we haven't seen since, I believe, 2005. A little bit of weakness in it lately, but the positive factors in terms of this trend continue to outweigh the negative factors with regard to the dollar. So the dollar sold off a little bit on Monday, and with that, the concern is, will it continue upward or not? And our AI software that we subscribe to indicates that there is continuing dollar strength anticipated going forward. And that's good news as far as our inflationary input is concerned, but it has to be continued if the U.S. stock market is going to benefit from it. And a lower dollar gave the S&P 500 a boost on Monday, and it managed to close slightly above the 50-day simple moving average. And as long as it manages to stay above 44.70, then we're probably going to see a continuation of the rally, though it will be difficult to move beyond the highs of late 2021. What we see down below is that the support for the current trend has been weak and continues to weaken even though the market has had a rally. People often say, well, the market's manipulated by the big banks. Well, and to some extent that's true. Banks have the ability to talk directly to CEOs and chief financial officers and get information about operations and profitability and problems before it hits the news and retail investors do. This sign of weakness means even with the downturn, that there wasn't a lot of participation in the downturn, but this little rally that we have means there isn't a lot of participation in that. So we have to be on guard, if you will, about what is happening to that. And that may well be tied to what's going on with the BRICs and their intention to create a currency to replace the US dollar as the world's reserve currency of trade. They're facing many problems. They need more participation. So the conflab that completed last Friday also included invitations to the Emirates, Egypt, Iran, Saudi Arabia, Argentina, and Ethiopia to come join our party. The summit generated a lot of headlines about the impact of this widespread group of nations, including speculation about the end of US dollar dominance as reserve currency. They should not be viewed as a threat, however. Even the International Monetary Fund is a little skeptical here. So there are certain things that need to be clarified, and the Mises organization published a recent report that outlined a number of those. Many political analysts believe that China lends, invests, or supports without any expectation of return. And that's simply not true. Who would do that? Okay, you'd lend to your grandchildren without expecting return, but that's not what we're talking about here. China is a major economic power and has no interest in being a global reserve currency. It's a communist country, for heaven's sake. Its currency is only used in 5% of global transactions, according to data from the Bank of International Settlement. So there were big headlines in the past 12 months about they used a direct trade between China's currency and the Australian dollar to buy coal. And they used the Chinese yuan in a direct trade with the Brazilian real to buy oil. Hallelujah! We don't need the US dollar. Well, that's the headline stuff, which you should generally ignore. The reality is that Brazil doesn't want Chinese yuan. What are they going to do with it? They've got to find somebody else who wants it. So what they do is they go to the Bank of International Settlements and say, we have this pile of yuan. How many dollars will you give us? And they take the dollars. And China does the same thing with the real. What do they want with the Brazil real? The Aussies don't want Chinese yuan. That's not a stockpile of wealth for them. So they do the same thing that Brazil does. They go to the Bank of International Settlements and say, we have this big pile of Chinese yuan. Give us dollars. And that's how those deals are put together, basically. What does Brazil know about what the yuan is really worth? Or the Chinese, what the real is really worth? Well, they go to the Bank of International Settlements and say, what's the real worth in dollars? And Brazil says, what's the yuan worth in dollars? And they do the swap directly, but they price the trade in US dollars based on the BIS valuation and the currency markets at the time. There is no other currency that's getting these international swaps done if it's not based around the US dollar. But China and Russia have capital controls. Well, that doesn't work. If you're the reserve currency, there has to be a free flow of capital. There can't be any question about if you do this trade, are you going to get your money back or your product back? That can't be a question of debate. It has to be certainty. Both Russia and China are doing their utmost to keep capital from leaving the country. What do you think people want out of those countries? Why did Russia in the former Soviet Union have to build a wall to keep people in? Because people didn't want to stay. They weren't keeping people out. Nobody was trying to climb over the wall, the Berlin Wall, to get into East Germany. It was always the other way around. And that basically is what we see in international flow of people today. People want out of these countries. That is not going to establish confidence that if we rely upon the Chinese yuan or the Russian ruble or kopeck or what they managed to put together some sort of joint function to have a new currency that the world relies upon. Capital controls don't work for building faith. And therein lies the fundamental problem with this BRIC new currency. Now, these countries have been acquiring gold. They are building their gold reserves, and that's their answer. Well, we have all this gold, it backs our currency. Yes, but if I have your currency and it's in your bank, am I ever going to get it out without a penalty, and at what price? It's impossible to have a global currency, reserve currency, without freedom of capital movement. And more requirements are needed than just having gold reserves to have a stable fiat currency. It's essential to guarantee economic freedom. That does not exist in China, does not exist in Russia. I guess it's okay in India, but you look at a lot of the emerging markets and freedom is not free. And that's the reason people want to leave those countries. China and Russia are much more demanding as rigorous lenders than many politicians think. It seems that some emerging market politicians think that getting China and Russia together and joining our party is going to bring strength to the system. But that brings me back to an old math test in high school about the strength of a chain with links of various size. So you have a link that will hold 75 pounds, and you have a link that holds 10 pounds, and one that holds 25, and another holds 33. And you have all these various links in the chain, and the question is, how much weight can you lift with this chain? And the answer is not to add them up. The answer is that the weakest link is the answer. The chain, no matter how many big links are in it, will only survive a 5-pound lift. So adding Russia and China with all these other weak links here does not solve the problem and create a stronger currency as the BRICs would suppose, and as some of the news media suggest is a real threat to the US dollar. We look at what has happened with the currencies that are trying to find a source of strength in Russia and China as a part of the group and adding these other countries. But we look at the lack of financial or fiscal control in these countries, and we find that it is more than lacking. The Argentine peso has fallen by 98% against the US dollar. The Brazilian real by 55%, according to Bloomberg, and the Iranian real has collapsed by 90%, according to The Economist. Putting together a bunch of weak currencies does not create a strong one. They're just simply the weakest link in here. And we can't forget the Russian ruble, which is off 68% against the US dollar. That's from Bloomberg. The best performing of these weak guests is, in fact, China, which is only off 14% over the last 10 years. That's not a sign of strength. Their economy has been strong for decades, but they've now reached a point where they are turning into Japan in 1989. Demographically, they have serious problems. They haven't had enough babies. They don't have enough working people. They have imprisoned large segments of their population that will not agree to the communist dictates. That's not a free country. It's not a free economy. They are facing major problems, and their ability to participate in the BRICs is in some ways good for show, much like Saudi Arabia will be willing to join to show that they're as good as anybody else, much the way that Saudi Arabia participates in developing green energy. So Saudi's an oil producing country that controls the price of oil globally, is building wind farms and solar farms. So they come to the G20 or to the BRICs and say, listen, we're in the green energy business too. We understand that fossil fuels have to go by the wayside. Saying that under their breath, like, you're crazy, because that's not going to happen. Without fossil fuels, our current global economy collapses. I kind of laugh with the young generation that protests shutting down fossil fuels, realizing that from the shoes they're standing in, the clothes on their body, and the iPhone and the tablet that they hold in their hand require fossil fuels for their very existence. They do not know what they ask for. But the Saudis come to these meetings and say, look at all we're doing with green energy. But it's a show. It's not because it's going to replace their actual electric grid, as it will not replace ours. But we can say, I'm just like you. I have the same concerns as you. Count me in, give me a vote. And therein lies the problem with this BRICs replacing the dollar. There is no strength in the deal. There is no common ground when you have dictators who want their own way in most of these countries. Freedom does not exist here, and freedom in personal, individual lives, freedom of business innovation, legal enforcement of law universally under a single standard is required in order to have the reserve currency. And the BRICs don't have it. The dollar remains dominant in our lifetime. Take a massive, massive black swan event to bring that to an end. And we remain the dominant military power. A discussion for another time, perhaps, but we still have more ability to deal with China than anybody really wants to talk about. So the euro was created to give strength where there were a lot of weak countries. Italy comes to mind, Greece comes to mind, Portugal comes to mind. Germany was the most prudent fiscal entity in the original euro and remains so today. That allowed the euro to gain some strength and credibility, but they have so many weak links in it, they still are not able to replace the dollar dominance. And we know with what's going on in the Ukraine that they have no interest in being a military power to make things work and be the policeman around the world. That's still up to us, the United States of America. China can increase its control and its power with these countries, which they are doing through their Brick Road initiative. And so they go in and lend money to develop port facilities specifically, or agriculture. And when the country with poor fiscal management can't make its payments, China does what any other lender would do. They foreclose. And they become the owner of the ports where they can control shipping, control transportation, control the inflow of population. It is a different business than actually trying to become a world currency. We just simply don't think that the end of the dollar is nigh. If it comes, It will not arrive through competition from another fiat currency, as the temptation of governments to destroy the purchasing power of their own currency is too strong. We're doing that ourselves. That's a risk, continuing to borrow profligately, not responsibly, without any real effort to take care of our own debt. There's the risk to the US dollar. Thank you for your time. Subscribe to this, pass it along to friends, email us, help@iriradio.com, call us, 800-317-9119. Thank you for your time today. Have a great day.